All right, guys, Elliot here with Phantom Trading again on this topic of creating passive income through trading. And what I'm going to talk about here to kick this video off is kind of what trading actually really is. Okay, so we sort of discussed that it's not buy and hold, investing in the long-term outcome of a particular asset, and that it's more capitalizing on the short-term fluctuations, both up and down of these assets. But what does that really mean, or how is this actually really employed? Okay, so I'm gonna kind of just stick with the ultra rudimentary basics of these concepts, but just to give a little bit more illumination to what we're actually talking about. Okay, so if we look at this price chart, essentially with trading, what we're doing is we're placing bets. Okay, we're placing bets with defined rules, defined boundaries, defined risk parameters, exit parameters, gain parameters, and what have you. Okay, so if we're looking at one of these channels that we identified, and our claim essentially was that if price kind of breaks out of one of these channels, then we have a higher probability of down movement versus up movement. Well, how do we actually capitalize on that? What do we do? Okay, well, when you're placing a trade, without getting into the specifics of leverage and margin and all these things, which are intrinsic tools of the trade, if you will, um, let's just talk about what we're actually doing. Okay, so if we are on this day, right, if price is right here and we start getting this breakout of this channel, let's even say this day, okay, where it's clear that price has broken this channel, and our assumption is that we're going to have further price movement because we are we're changing the direction of movement once we break one of these channels, right? So what we do as a trader is basically we say, okay, well, the day closed right here at this point in time, okay, and we're defining a set of parameters that's saying I am betting that the market is more likely to move this much down than it is that much up, right? Now, the up part, the way we're defining this range is based on, in this case, this is just kind of using simplistic terms, but we're using the highs, okay, the most recent highs that preceded this breakout point, okay? So the entry point would be the close of this day, right? And our stop out point, if you will, where we're saying we're wrong. If price goes above this level, then we take a loss, okay? And we can bet whatever amount of money that we want on this outcome. We could bet $100 that says, I bet $100 at this point in time and in market price that we're going to make it to this point before we make it to this point. And if I win $100. Okay. If I lose, if prices go above this point before reaching this point, then I lose $100. Or we could make it $10,000, right? You can bet $10,000 that this outcome is going to happen before this outcome happens. Okay, and there's this, obviously broad topic of risk management and how much you should bet based on how much risk capital you actually have, and so on and so forth. But without even getting into those details, this is the idea of trading. Okay, and then you just wait for the market action to actually play out. And in this case, we would have reached our profit target right here, and we would have had our $100 gain or our $10,000 gain or whatever our risk parameter was at the time, okay? And the same would go for something like this, okay? If we were, whether we enter here, okay, on this candle that's just barely breaking out, or this candle, or this candle, or this candle, or this candle, and we will talk about which would be the better choice, or at least the highest probability of a favorable outcome choice in just a minute. But regardless, we are again making a bet. Let's say we chose this candle here, that we are going to experience a move up from this point in time and at this price that we're betting, say, $100 that we're going to reach this price before we reach this price. Okay, and if we're wrong, if price comes down and reaches this point, then we're down $100. We lose $100. But if we're right, we gain $100. Okay, and then we let it play out and we win our $100. Okay, so this is all trading is. It's placing bets, right? It's placing bets on one outcome happening over another, and it's placing a specific bet with a specific parameter of loss versus gain. Okay, you define. This is one of the greatest things about trading, as opposed to, say, gambling, right? This almost appears as a form of gambling. Okay, and in a way it is, right? You're placing bets, right? You're speculating on one outcome happening over another outcome. However, as opposed to, say, gambling on a horse race, for instance, using a parimutuel betting system, you don't you do not know the payoff of that bet until the entire uh, world's bets through that parimutuel system are in place, which doesn't happen until you've already made your bet. In other words, you can know your downside, right? You know that you're betting $100 on that race, for instance, but you never know what your payout's going to be. If everybody is betting on essentially the same outcome, your actual payout could be significantly less than what you're risking. If you're betting on the favorite horse, for instance, you might get $20 to your $100 risk that you bet, right? In trading, it's completely different. You actually define exactly what your payout's going to be, and you define in addition to what your loss would be if you're wrong. So you get to control both sides of the equation. Okay, so this is why trading is such a wonderful form of generating an income. Okay, so that's what we're talking about when we're talking about actually trading. Okay, just wanted to kind of clarify that point. Now, when it comes to where we're at in the current price, okay, and what we would do here, I want to talk on this point a little bit, which is, okay, we've broken out of this channel. Does that mean that we simply go long? And if so, where do we put our stop loss and so on and so forth? Well, to address the second question, assuming we are going to go long, where would we put our stop? It would be plain and simply below the lows that preceded the breakout, okay? So the current price is right here, okay? It's this point in time and this price. This is our basically our bet. We're betting that price is going to make it to this level before it makes it to this level, okay? And then we define how much we want to bet on such a proposition and go from there, okay? But let's talk about validating this breakout and if it's a breakout that we particularly want to take or not, okay? So let's just go back and look at some of these other breakouts, okay? So when I am trading a breakout, a trend direction change, a change in direction, what I'm looking for is a very strong candlestick, okay? One of these strong candlesticks that is several times the size or similar to the ones preceding it, okay? So if we were right here, okay, and we're just starting to break out of this channel, I would not take this particular bar as an entry, nor would I take this particular bar, especially because it actually closed down as opposed to up. Even though it did break out of the channel, it actually closed within the channel, okay? And again, there's a lot of nuance in what I'm saying, and I'm kind of brushing over some things fairly quickly. Uh, but I want to just kind of focus mostly on the basics and mostly on the obvious, right? So when you see this big candle, that's an obvious candle, right? That's a very obvious move. It's a very strong move. That is the kind of signal I would want to take my bet on and hope for further action, okay? Same with when you're at a point in time like this, okay? This is a nice strong candle, okay? It's bigger than the previous several bars. However, it's just barely touching the bottom channel and hasn't really broken out yet, right? But this candle confirms it, okay? This is a clear breakout. This is a clear signal to take this particular trade, okay? And you could do the same thing here. You could say this is a nice candle. However, it's just barely breaking out of the channel. We want a little confirmation. This one doesn't do it because it actually moves price back down lower, okay? But then this one here is a nice strong up move, okay? So the breakout already happened, and this is confirmation of said breakout, and we get our higher prices, okay? So that's it. That's all that it comes down to on a very basic level is defining these sorts of principles, if you will, um, and acting on them. Okay, it's forming these sort of if then else statements, and then taking action on them, placing bets on them, and doing this consistently and repeatedly every time you see these signals, and over time you build up this passive income that can one day become your primary source of income with enough training and education. Now, on that note, to really get to the level where you are overcoming your losses, because no matter how good of a trader you are, whether you're Warren Buffett or George Soros, all of these guys, okay, take losses all the time. Everybody takes losses all the time. And to actually kind of formulate this into your standard income and something that you can reliably pull an income off of to pay your bills and support your lifestyle, it's going to take a quite radical push beyond these extreme basics of what we're talking about, and a radical dive into risk management, position sizing, diversification, how many trades you're going to take, how many trades you're going to have on at any given point in time, know when to cut your losses short, know when to kind of press into your winners and, kind of uh, keep the ball rolling quicker when you're doing well and slow it down and kind of retract when you're doing poorly. And all these topics are things that you have to gain a very intimate relationship with. So click the links below to head to our website, and you can see what we have to offer. And if this is something that you want to take beyond the level of simple, um, you know, passive income or simply, testing the waters and getting your feet wet and seeing how it goes, try that. Take the advice that you're getting in these videos and actually apply them. See if it works for you, and if it does, you might be ready to take the next level. And if you do, we hope to see you there. Thanks, guys. We'll catch you on the next one.